Hi, and welcome back to the European VC, the go-to podcast for everything European VC. If you love the show, share it with your friends and join our newsletter at eu.vc. Today, we're happy to welcome Monique, co-founder of Pact VC, an early-stage tech fund backing mission-driven founders with global ambitions. They have over 40 years of experience building businesses in Asia, Middle East, and India, and a strong track record investing in them in the UK and Europe. Pact invests in seed-stage companies under three themes, which they call their ABCs: access, betterment, and climate. If you enjoy our content, do support us by hitting the follow button, giving us a review, and following the European VC on LinkedIn.
Monique, welcome to the European VC podcast. Super nice to have you here. Today, I'm going to ask a weird question to start. How nice is Anne Hathaway? Is she a cool person to be around or not?
I can't say I've been around her much, but I hear she is an incredible person. She's very sweet and really a very dedicated mother, actually.
She's actually very, I think to just, backpedal a bit there, she's a good friend of one of your partners. So, and I thought that when I saw that, I respect that a lot, because at face value, when you see, okay, this fund has, some big celebrity, you're like, yeah, that's like some insignificant ticket. There's no relationship. It's whatever. And then, it doesn't really impact that much. But when I then saw that you're actually close to each other, whether it's the one GP or the other GP, doesn't matter, right? But the fact that there's an actual relationship and it's rooted in something that has value, yes. I love it. I would have almost hated you for having some celebrity just because they're celebrity. So I'm happy that that was not the case.
Yeah, absolutely. I'd like to say I'm 2 people removed from Anne Hathaway, so it's a good feeling. No, all jokes aside, Reem is very close with Annie and her family, so it's a great relationship to have, and we're really lucky. Just on that point, talking of celebrities, Jeff Dean is an incredible person in tech and Silicon Valley, so it's interesting to see what the kind of publications picked up and what they didn't pick up on.
So I don't know if Mike Butcher is listening into this podcast, but I would love to give him some shit for picking up the most cheesy headline that you could for the launch of one of Europe's best new funds, and then picking that part. I love that.
No, we can't complain. Mike did an incredible job. We were really happy with the press, and we have received a lot of positive feedback from it. So yeah, we are very grateful to Mike.
And he just knows his readers, and I do as well. So for that reason, I had Anne Hathaway written all over my post as well. So we're all suckers for likes.
No, but on a serious note, though, Monique, I did that question in a provocative manner just because I think it was like an interesting kind of headline connected to your fund announcement. But let's go back to the standard model. Monique, super nice to have you. Really happy about that. And I always start the same way. I ask our guests to give us a quick rundown of how the hell did they end up in venture? How the hell did this fund, in this particular case, Pact, come to be? Give us an overview of everything.
Yes. So I've known Reem and Tong, my 2 partners, for many years now. So we got together really a couple of years ago. We were talking about just the idea of launching a fund and doing something differently. And, we've got a long-standing relationship and a history. We've also been in venture for a while. We're also very different and complementary from a skills perspective, but different from a background perspective. And we thought, bringing this together can add genuine and true value to the UK/European ecosystem. So we got together with the intention of building something different. And I'm aware everyone says this. I'm aware it's the cliche line. But genuinely, when we look at the market, we like to see ourselves, as complementary and bringing something that's a fresh perspective. So I'm not sure if you're aware, but our backgrounds are all, from various parts of the world, different cultures, different languages, different experiences. Reem was an angel investor from 15 years ago out in the Middle East and Africa. Tong has a really interesting background. Computer science at Imperial, investment banking for a couple of years before she saw before she moved over from the dark side. to then going to launching and eventually exiting her business in China, coming back to the UK and joining VC. So, Reem's extensive experience in the Middle East, and my experience both in the UK and Europe, but I've also spent a lot of time in Asia and Middle East as well. So we really wanted to bring these experiences and these fresh perspectives together as a team to launch, a unique fund. And how we really kind of position ourselves is really, we don't use the word diversity in the typical way. It's, again, very aware that it is cliche, but we always say our diversity in our thinking, diversity in our backgrounds, that's what we really utilize. And that means, when we invest at early stage, we really think about how to bring these kind of this knowledge, these networks, these experiences for the benefit of our founders. So we're looking at kind of internationalization strategies, understanding, where can these kind of companies scale to? Have they thought about it? Have they not thought about it? And then really doing a deep dive pre and post investment, quite frankly. What's also interesting is we've brought in kind of these extensive networks we've built over many, many years as a kind of support system for the fund itself that also benefits the portfolio companies and us as GPs. So this is, having, fintech experts in the Middle East, both in the UAE, let's say Saudi Arabia, having, technical expertise, people building businesses in Asia and so on. So we thought, this was quite fresh, quite unique. We're, a young team, but we're very experienced, been investing for, 15, 20 plus years. So that's how we got together to launch Pact, really. And kind of, I haven't even delved into, our personal, whys and our passions, but, ultimately it's an alignment of our, morals, the way we work with founders, the way we, what we want to build and add to the ecosystem as well.
And that is, I guess, kind of a perfect kind of way to introduce another topic that we love asking everyone, which is origin of the name, Pact. Pact can have two different meanings if my English doesn't trick me. I'd love to hear why you chose that name. What does it mean to you as a team and you individually as well? And then kind of, let's try and make it kind of specific. How does that then impact the way you deal with LPs, co-investors, or founders, whatever makes most sense for you to share?
Yeah. So we originally had a different name, which was the name of a place in London. However, given the pandemic kind of came over, we hit the pandemic, we had lockdowns, and we were working remotely, and we were like, well, that's kind of weird to be associated with a given place where we realistically probably won't end up being in that area post-pandemic. So we were thinking about what's a unique name, and I'm sure most of your guests have said it's really difficult to come up with a creative name, and we're not remotely creative people. So we were looking up so many kind of names and domains, going from trees to streets to, Arabic words, Turkish words, words in Mandarin. Someone who has a marketing background said, what about Pact? And we thought, wait, that actually has a lot of meaning, because the reason we got together was, we like to believe we have to kind of bring the human touch to venture. It's about making a pact with our founders, making a pact with our investors, and, quite frankly, each other is, again, super, might be cheesy, but I think it did put across our kind of, our mission aligned kind of interest out to the market. So it was short. We're not backed. Everyone says backed. No, we're packed. And then in terms of the tie,
that's another fun.
In terms of tying to impact as well, kind of has a nice little play to it. So that's how we came up with the name.
That's cool. That's cool. And then let's get into that impact thing that you just said, because that gets us very well into the investment thesis / investment themes. And you've got the ABC framework that
Yes.
that I love. You say that you're not too creative and marketing oriented, but I think that is at least a much better approach of marketing your investment thesis than most firms do.
That's great. No, thank you so much. So in terms of what we invest in, our themes really center around 3 pillars. These are access, betterment, and climate solutions. And what does this mean? It's quite broad when you think about the themes itself, but we're very particular about what we do and don't invest in. So access is really anything that democratizes access to products and services, particularly kind of sectors that fall under this, will be financial inclusion or SME tools, essentially leveling the playing field. Betterment's mostly around, looking at personal and professional well-being, which can be anything from education. We're really interested in kind of upskilling workforces or talent, healthcare, obviously, and, future of work is also another area we're looking into in the space. And then climate solutions is pretty self-explanatory, but mostly around kind of sustainability. We look at more software enabled as opposed to hardware enabled. So those are our three themes. What we wouldn't kind of be a typical, people won't think, right, Pact's an impact fund. And I think it's intentional that we don't want to market ourselves as, an impact fund, not because we're not, but it's mostly around the point of thinking beyond what impact means. So impact can mean something different to everyone. Everyone has a different interpretation of what impact means. But, first and foremost, it's being, mission aligned with the founders. What do these founders want to build? What's the impact onto the stakeholders of the business that they're building? And also really understanding kind of the business proposition overall. So, it's not just the sake of, we're doing AI tools as well as, financial inclusion for diaspora communities. So, it can range. So it's not kind of a typical impact fund per se, but, we would like to think about these in slightly more deeper level.
And what is it, Monique, that, should I put it on a technology level or business model level that ties these together? What, if you were a pure impact fund, you could say, well, we've got a great brand and impact. We know everything about how climate change technology kind of works. So that's why we're focusing there. What is it that ties this together with your team and then your approach?
Absolutely. So the team and approach, and there's the tech angle of what you've asked, I believe. Yeah. So obviously everything we invest in has to be tech enabled. So absolutely it will be technology driven. Actually, we do a lot of B2B. We very rarely do consumer brands, mostly because, look, Reem has built a consumer brand. We understand it, but it's not really our core focus. So how does it tie the team? So how do the themes tie the team together? I guess. So it really does go back to our personal kind of interests and personal experiences. We've got a combined portfolio in terms of angel, previous funds, and our current kind of team investments, 65 plus companies. And actually, when we took a kind of stock check of all of our companies in the portfolio and in the businesses we've backed, generally the most successful ones, when I mean successful being either exits or 200-300 million plus valuations that they've grown into. We've always been seed investors, so seeing them from pre-seed seed to that level. The ones that had an impact element were the most successful ones. This is including, investing in Europe's largest EV subscription platform, or, investing in the largest education kind of textbook library in the world. Again, providing access to education. Providing kind of SME tools as well. So that was an exit, a company that exited DocuSign. So it was really looking at our track record, looking at what drives us personally as investors and humans, quite frankly, and then tying this together to build a thesis around the fund. So actually a lot of thought and a lot of trial and error went into really building and articulating the thesis, which I imagine most kind of early stage emerging managers will have, kind of bringing all their experience together. So we were lucky enough that we've got a very, extensive portfolio, extensive track record, many, many years in the industry, and really tying that together and what we want to be known as. So that was really my point in terms of not being a pure impact fund, because we want to normalize kind of impact investments, but having very commercial outcomes. We're at the end of the day investors. Our job is to return money to our LPs. So we're focusing a lot on the commercial, kind of scaling the commercials of an impact business as well.
Now I'm going to ask a question, and that's because I got your LP newsletter update today, or maybe yesterday, and it ended on the happy note of the fourth edition to the child family of Pact. So I'd love to hear a bit about I need to dive into that story of how you managed to raise a fund with each one of you as partners having had a baby during your fundraise. I think that is probably a record. And I'd love to hear, we all know how tough it is to raise a fund. So I can only imagine how that has been for you.
Yeah, we try to be really open about our experience. We try to normalize kind of talking about having children and mums working. And this is not something that we should be ashamed of, which is why, we do talk about it. And we're 100% not the first and won't be the last women that do this, having a baby while raising a fund or launching a business. but we just wanted to bring it kind of to the forefront of the industry, again, being very male dominated. We have a lot of friends, women in the industry that are treated unfairly and, not very equal to their male peers. So again, just trying to normalize this conversation. So yes, we had 4 babies within 22 months. Tong and I had our baby 4 days apart. I always tell the funny story of Tong closing our anchor investor while in labor, and this is a true story. We had to tell her to stop working and go to hospital, and she may or may not have given birth a few hours later. So just goes to show how close it was. So how do we do it? Honestly, it's a support system. So we have all sacrificed a lot. Again, very normal for emerging managers to this is a long process for setting up the first fund. We have incredible families. Tong's family moved over from China to help her with the baby. Reem's family, same from, parents came from Lebanon to help out with the baby. I, sold my car, rented out my house, moved back into my mum's house to help with the baby. You definitely need a support system. Was it easy? No, but we learned as we went along. And I think what's important is building the firm inclusive kind of from the ground up. So it's like enabling flexible working, but it's not just kind of, I want to work from home today. It's, managing around certain feeding hours and bedtime and so on. And, it might mean that we're working all hours of the day, but at the end of the day, we still have that understanding, flexibility. And honestly, I think that whole experience brought us closer together. It's a very obviously personal thing that happens to a woman, and having your kind of colleagues, as a Tong and I would try to coordinate. So they were born on the same day, but unfortunately they were born 4 days apart. So, here we are.
Here we are. Now, I think what you said there was so important, because there are so many levels that I think for people who haven't been necessarily very closely involved with having small children, either because they weren't, because their spouse did the most of the work, or they were a bit maybe too far connected to that part of the process. Yeah. I think it's so easy to think that you have flexible work hours because you want to be there with the kids. No, when you're the main caregiver, it's about feeding hours. It's about making everything just work. You can't not be there. So yeah. I think what you've done is just absolutely amazing.
Yeah, I forgot to mention our partners as well. Our husbands have been great. They had a role to play in the whole thing. No, look, they were great. Again, I think it's long hours. It's, time away from very young children, and having, supportive partners that understand and can step in. Again, I'm not saying anything new or anything kind of revolutionary, but the whole setting up a fund is a long and lonely process. When I say blood, sweat and tears, I genuinely mean blood, sweat and tears. So, you absolutely need a support system around you, and we were lucky enough to have that. So
I think it's an amazing story. I think you're an example to everyone. Also to because I have spoken to, angel investors, women that want to raise a fund, and then are thinking, it's now a good time, because they're thinking about, family and everything. So I think it's so cool that you both did it, and also that you're vocal about it and sharing your story here. I think that's amazing. So maybe let's get into to a bit about the this is going, and this is exactly the life of a working mom, right? We just go from talking about this to me now asking you, could you tell me a bit about your portfolio model, because we haven't dived into that at all. So tell me, how do you, because now we've heard the thesis, let's get into the strategy part. How many, first, we didn't even talk about that. How big is the fund? How do you spread it between, first, initial tickets and follow-ons, different verticals, so on? How do you think about all of this?
Absolutely, yeah. So it'll be a £30 million fund. Done our first close, I mentioned. We will be deploying tickets between 1 to 1.4 million on entry. We will follow on up to Series A, as we have 40% of the fund reserved for follow on. We invest predominantly at seed. We can invest at pre-seed. We will look at it more opportunistically given the ticket size. So if we do go in at pre-seed, it'll be with the intention of taking a bigger position in seed round. The fund itself will have targeting 18 to 20 portfolio companies in the fund itself. So that is about 6 deals a year. And those are kind of the main areas. So, we like to be very hands-on. we go, all in. We're very much kind of conviction-driven investors. I mean, a fund of our size, we do big tickets early, and that's intentional. That's just our model and the way we've always worked with founders, and we're very proud of that as well. So it's not a spray and pray. Not there's anything wrong with that either.
I was about to just double click on that 1 to 1.5.
Yeah,
that is big tickets.
Yes, again, it's very much kind of conviction, having conviction behind our investments in the companies we invest and we back. Because of our model of working with companies very hands-on early, specifically with the international angle, we intentionally, we take big positions early with big tickets with the intention of working very closely with the teams in thinking about the next stage of their business. So if we were to do, smaller tickets in many, many companies, that model necessarily wouldn't work. So it would actually impact our whole strategy and our whole thesis as well.
Do you de-risk more than you would normally say that seed stage investors typically do before investing, or afterwards by tranching the investments a bit more than most people would do?
No, we don't. We won't be tranching any investments. Do you mean in part of the due diligence process?
Yeah, exactly. Some are a bit slower to get to the final commit, but that's just being more thorough as well, right? And if you want to do a big ticket, well, then it's fair enough that you say it's probably not going to be a 7-day process.
Yeah, it definitely won't be a 7-day process. I'm not going to lie and say it is a 7-day process. Because it's partner driven, the deals are all, we source our investments, we make the decisions, it's all done through us. The decision itself necessarily doesn't have to take long, but like you said, it's specifically in the kind of international aspect. What we look at, we do when we speak with the founder, for example, if they've already identified a couple of markets that we know that we can go out and speak to our network in these markets and test, really understand, are there any strategic partnerships we can support, strategic investors, anything kind of that we know will add value to the business and the deal itself. So that part, I mean, honestly, I don't think would take any longer than, a normal, let's say a smaller ticket investor will, but we are quite thorough. But as I said, it's very collaborative with founders. We haven't had anyone complain.
I'd love to ask you 2 questions. I'm maybe going to ask them separately. So we were talking a while back about the kind of ABC approach, access, betterment, and kind of climate framework, whatever you want to call it. Yeah. Access and democratization are words that Andreas and I hear a lot also in our own business, right? So I'm genuinely curious about this. I'd love to hear your thoughts around, what does access, what does that democratization of goods and services mean to you, and kind of where you see interesting things and where you see more kind of hype and, not that interesting. It's just part of a bigger kind of cycle of things. I'd love to hear your thinking around what is access for Pact.
Yeah, I'm really glad you asked that, because actually I agree that democratizing, specifically, that word has been overused. So I think access to us can,
right now I'm so happy that we have veered a bit away from using it too much in our communication. It's actually being used more towards us than we use it to the market. So I'm happy to do that, but it's for the same reason.
Well, you guys have built a great brand, so I'm sure hasn't been detrimental, but I agree, it's been overused. So how we define access is really when we look at a company or a product, it's saying, right, who are the beneficiaries of this? And what is this company providing that isn't currently in the market, or that's impacting their business, that's impacting their growth, for example. So a company we're investing in right now, which we haven't announced, their core technology they're targeting is SMEs. So this essentially is a piece of technology that would typically require a large dev team, large kind of engineering teams, but also a very kind of deep understanding of technology to implement such tools in the core business. So if you look at kind of companies with 10, 15 people, you're not going to have a team to build AI tools or productivity tools. So obviously this whole low code and no code revolution, actually, I'm quite interested. We are all quite interested in that space. Interesting to see kind of especially with ChatGPT as well, seeing what the impact of that's going to be. But so this piece of technology, this product is allowing companies who have access to technology that typically larger companies will have access to. Not only is it access to the technology, but it's also the impact that will have on the core business. So improving sales and marketing functions, for example, improving a lot of mundane things that can be automated to allow people to do more fulfilling, tasks and jobs and so on. So that for us is really access. So providing access to piece of technology for SMEs that will typically require large resources to implement. On the other side, we're looking at financial inclusion. We're investing in a company right now which essentially provides access to financial products that are typically overlooked by traditional banks and so on. So that is a different type of access. That's a more kind of personal, obviously one is B2B, one is, essentially B2C, but it's not kind of in a consumer brand per se. It's very much around kind of financial products for specific communities that don't have access to these services. So it'll be like savings tools, savings products, but also eventually they'll go into other financial products as well. So that's how we kind of essentially view access. Really think of it in a more broader sense rather than just at face value.
Yeah, it's interesting because we hear access and democratization. At least that's my own perspective. I see it a lot applied to kind of more consumer-driven projects, ventures, whatever it is, right? And you kind of started off by saying, well, more B2B kind of crowd. So that was why I thought it would be a really interesting question. Another question I have for you is, I was going over the TechCrunch article where you guys basically announced the first closing of the fund. And there's your first investment is disclosed there, Growth Kitchen, if I remember correctly. I'd love to hear you talk a bit about that deal specifically and how it is aligned with Pact Worldview, basically, right? The ABC framework, so to speak.
Yes, so Growth Kitchen was the deal we warehoused a few months ago, hence why we'd announced it a few months ago as well, from a PR perspective. So Growth Kitchen, when the founders, Tom and Matej, came to us, they had a vision of using data, using a lot of information that they built in terms of kind of gathering that data and using it to kind of dark kitchens, obviously, again, not a novel concept, but it's really using it to build dark kitchens in a different way. So they're very asset light, but what's more interesting and important for us, and quite frankly, this wasn't really at the forefront of their minds. It's something that we actually worked with them on implementing, building kind of sustainable practices within their kitchens. So it's really understanding the CO2 emissions of their kitchens, it's really understanding reducing food waste, it's really packaging, as well as fair practices and rights for the workers in the kitchens. So it's actually building a more sustainable brand around kind of within the food delivery industry, which isn't typically known for its sustainability. So that's how we kind of came about. And honestly, that was an evolution. We worked together with the founders on that, and they've been very receptive to it. They've built incredible practices. We regularly track the data points that I mentioned earlier within the companies also. Very proud of that one.
How do you think about when you have this, impact angle to your fund as well? How do you track metrics that play on the impact angle, and how are you? I don't know the regulation for your fund, but are you obliged to do that as well? And how have you managed to get everything together there? Because that's something that most GPs are, if not struggling, then at least working with these days.
Yeah, so we're not required by from a regulatory standpoint or within our LPs to track this. However, it is part of our. This is kind of a very important question because I think most managers will agree there isn't kind of a one-size-fits-all approach. We tried to have a one-size-fits-all approach and it didn't work because every company is kind of, what they're targeting from an impact perspective is quite different. So, we will start with, using Growth Kitchen as an example, start off with things like carbon emissions and food waste. That's a very specific, that won't apply to our second business. For the second business, really looking at, we will start tracking, really understanding the impact of the tech on the companies. When you look at things like hours, cost saved, reduction in hours spent on these tasks as well. So it really varies. It can also go into things at a deeper level within the organization itself. So understanding the construction of the team, the hiring practices, and so on. So it really varies, honestly, company by company. At a firm level as well, we are tracking things like our carbon emissions and our carbon footprint as well. and figuring out a way of what's the best approach in terms of offsetting these as well. So yeah, I mean, look, it's an evolution. We're working towards it as we kind of work with more and more companies. I think we'll eventually become better at it.
Interesting. So before we go to the quickfire round, I have one final question which ties this a bit together with where we started, which is you've got this impact angle as we just spoke about, and I'm curious to hear how you see that impacting your internal operations as well as a fund. And now you said you track your carbon emissions, and that had me thinking, well, you are investing across the globe and you've got an African investment. How do you work with your portfolio of founders? Do you see that you want to be close to them in person quite often or not?
Yeah, so just to be clear, we will invest predominantly in the UK and Europe. So we are not, especially for Fund One, necessarily investing kind of globally. We are very conscious, for example, of the events we go to if we need to travel to them. So, we're absolutely, taking this into account when it comes to building our own firm. There are certain things, again, around what we implement with founders. For example, we have our 1% pledge. So every time we invest, we add 1% additional capital on top, completely non-dilutive. It goes towards founders or the management team. They can use it however they like, but it has to go something towards their kind of well-being and their development, whether it's, they need counseling, whether they need exec coaching. We're very open about that. We have things like mandatory 2-week annual leave for founders that we force them to take. Again, that's, kind of implementing what we have in our own firm to the founders we work with and the companies we work with. So, as I said, it's something that we're evolving as we go along, but absolutely, I mean, we're trying to be more conscious of everything we do and the type of firm we build. And, looking at maternity, paternity policies, for example, flexible working and understanding, how best to use tools and technology to build, whether they need to build remote teams, reduce the need to, fly constantly to, more than one geography and so on.
Yeah, super interesting. Another final question, sorry.
That's fine.
Because you just...
I'm not going to lie, these are very serious questions. I was expecting different.
We always tend to jump into some rabbit hole and then we can't figure out how to get up from it. So we'll just keep diving. And this one does a bit the same, because now you said that you care about the maternity and paternity leave. Thinking inside the firms or the companies that you invest in, and that had me then thinking about one of the guys that we often have on our podcast, which is on the Lowdown every Friday, and that's Dan Bauer, and he said, well, he would love to invest in more women founders, but he's not seeing that deal flow. And then I thought, I wonder if you as Pact are seeing more women founders than your peers.
Yes, it's really interesting. Dan is one of my favorite people in the industry. So, hi, Dan. Anyway, so I think in my previous role at another fund that I launched, I was there for about 3 years. Honestly, I probably saw 2-3 women pitch or present to us. And I was always wondering why is this the case? We're trying to be a bit more open and be a bit more out there and, be more approachable. But quite interesting, actually, having 3 women from ethnic minority backgrounds. Mm-hmm. The deal flow is completely different. Yeah. A lot more women, of course, a lot more different. So we did 7 investments while we were fundraising as a team. So we invested either as angels or did SPVs. And, 50% of those investments were women founders, 70% were immigrant founders. Yes, it's a very kind of small pool of data, but even if you look at our wider track record, wider portfolio, absolutely it's completely different. And I think my theory is it's because being women, and, again, nothing new or innovative here, but I guess it's being more approachable. The fact that women are more comfortable around other women, and, that might be, people might disagree with that, but actually, I mean, if I was a female or a woman founder, and we'll look at funds or investors that are aligned with what I'm building or my kind of vision. So I think it's being approachable. I think it's connecting with. We're very, as I mentioned earlier, it's very the human touch. It's understanding founders. For example, we met a founder last year. We did an angel ticket in this founder, a very small ticket, but we spent the first kind of 20-30 minutes talking about her family's background. She was from Zimbabwe, talking about our immigrant backgrounds. We're all immigrants ourselves, and it's really understanding, but it's not making kind of a whole marketing ploy out of this. Like, I'm an immigrant, so I only invest in immigrant founders. It's like you will connect with these people regardless, right? If you meet a founder who you share kind of cultural, background or understanding, or, you have similar upbringing stories. Like, I grew up in a council estate in North London, and I think that adds a different kind of level of kind of connecting with founders who maybe have come from similar backgrounds. Reem grew up between the UAE and the US. Again, that's a different perspective. Tom grew up in, communist China, a very different perspective. So I think that's the diversity we like to talk about. It's really using that to connect with relevant people. And it's not to say, we only invest in the women. We don't. We invest in the best founders, regardless of their background or their gender. So I think it's a massive advantage to us, quite frankly, having that richness of our backgrounds and our experience to connect with specific founders.
I would venture to say that I absolutely agree. That's incredibly exciting and interesting to see. I would then ask one question. What if we flip that to the LP side? Have you also seen a better uptake with let's call it LPs with a different background as well?
Majority of our LPs are internationally based. So our anchor LP is based in the UK, but they also have an incredible kind of rich cultural background and history. So I think I would like to see more women LPs, quite frankly. We don't see them enough. We don't present to enough women LPs. So, I think that will change as women obviously build more wealth or take, more decision-making roles on the LP side as well. So, no, I don't think we've seen enough kind of diverse LPs, to be honest. But we have interesting LPs, as I mentioned. We have a South American LP who we've known for a while. He's built businesses all over the world. Again, really resonated with our whole international angle. We have LPs from the US, from the Middle East, for obvious reasons. So it's a bit of a mix, but I personally don't think it's enough women or different types of LPs.
Monique, time to move into the final section of our episodes, which is the quick fire round, when we ask quick answer questions, 30 to 60 seconds each. Are you ready?
Yes, let's do it.
First question: what areas, sectors, or technologies excite you the most that other people around you don't really feel that excited about?
I'm really excited about the low-code, no-code revolution. I think AI, especially given the kind of recent revelations with ChatGPT or, that whole industry itself, is super interesting how that can be used in areas such as education, whether it's future of work. I'm really interested in upskilling workforces. I think we're going to have a massive issue of not only redundancies and the recession that's kind of happening now, but skills are changing, industries are changing, and it's really companies need to adapt to that. So I think that's a huge kind of commercial opportunity.
Second question of the quick fire: what are your top tips for emerging VCs who are out there fundraising right now?
Make sure you have enough personal runway, at least 24 months, to launch a fund. It's not easy. And also make sure if you do have a partner, have that chat with them to say, this shit is going to be hard and I need you to support me. We may have to sell our car, we may have to sell our house, and prepare for them. And, don't be afraid of starting a family if you do want to launch a fund as well. I think if you have the means, if you have the support, which is a luxury, I'm aware, just go for it and start investing. Build your track record, as a team, as an individual, deploy any money through EUVC or through other platforms, just to build that track record. I think that's hugely important. That will also enable managers to test their thesis, test their processes. And, there's nothing better than actually doing it in real life.
I love that. Third and final question of the quickfire round: what has been your most counterintuitive learning since you've embarked on the Pact journey?
I think team dynamics. Building a fund, I imagine it's not too different to building kind of a startup or a company. It's really understanding how the team skills can complement each other, how to work around people's strengths and their weaknesses. So that to me was, I hope I'm speaking on behalf of my partners as well, kind of an interesting learning experience for us. And honestly, I can't imagine doing this with anyone else. So my partners have been incredible. I think we are an incredibly strong team, only because we've tested things, we've talked very openly about it. So that has been, was a surprise, but also very kind of happy with where we've landed and how we operate today.
Monique, thanks a million for joining us. We loved it, as I am sure our audience could hear. We are big fans of the Pact team and everything you've built so far, and we look forward to joining you on your journey.
Thank you so much. Thanks for having me.
Thank you for listening to this episode of the European VC, the go-to podcast for everything European VC. If you love the show, share it with your friends and join our newsletter at eu.vc.